Earnings updates here. Stocks, the numbers. First company we're looking at, Celsius Holdings, symbol CELH, listed here on the NASDAQ. There's an energy drink company that we spoke about. I personally looked at it in the numbers about 2 weeks ago, maybe. It was like the end of October, the 25th. And we were talking about the potential bottoming out going into these earnings. But of course, we had to wait and see, how these earnings do actually come out and get reported to us. But I also looked at the assets outweighing liabilities. We looked at, the positive equity over time. We looked at a lot of the growing numbers. I know they've taken a hit on the revenue as of late due to that Pepsi pullback on inventory. But they do also cite that certain things like Amazon sales, like on the retail side also, like all of these numbers are increasing. Their international market share is increasing. So even though technically they missed the mark and the stock, as you see, did take a slight hit today, dropping down to new lows here, 27.78 here intraday. And then after about 11 a.m. started to bounce and climb back up to almost 30. So we ended up losing only about 5.33%, which in my opinion isn't really that too big of a drop, especially since the stock is up, who knows, several hundred percentage points over the years. And then, of course, we did a 3-for-1 split, but everyone's upset because basically since May, we ran back up here to these highs of almost 100, and then we've basically been channeling down. So for the most part, again, the company came out with a slight revenue miss there, then came out with a nice quarter there, and just continued the sell-off, coming back down to earth. And now we see, we heard the news, of course, initially of Pepsi. That brought the stock down, continued it below the 20-day moving average, as you see. Then we had a nice bounce, and then we're coming back down. So now the stock hit 27.78. And my main concern here is if we back up to 2021 here and 2022, and you can see that you had the tightening and the consolidation taking place at these key levels, which looks like, in my opinion, like the high teens, maybe like 16 and a half, 17, up to like 20, 20 and a half. That looks like the tight range that the stock was in at two separate points as it came up to that level, bounced around it, and then broke up and out. And then it came back down to retest that level, hung out there for a few months, and then again broke up and out. So my main concern is that because we're in this downtrend, which kind of, in my opinion, looks like a long-term descending wedge, then we may continue to bounce down and stay in this range as we approach next quarter's earnings, and then potentially start to break out right after the ball drops and run up going into next quarter's earnings. So in the numbers, it may not make much sense, but remember, stocks, a lot of the companies are only as good as their last earnings, if you will. And technically, everyone sees that right now this company had, a couple of missteps with the Pepsi issue. And now, again, revenue drops now year over year. So people may be concerned about the plateauing of the revenue, right? We spoke about this in previous videos on CELH when we were seeing the fact that analysts kept bumping up these estimates because we have to find out where the ceiling is, right? When are they finally going to stop beating these pumped up estimates and start missing earnings so that we can adjust accordingly? And then when is the actual growth going to potentially stop and start to level out? So people are upset, though, in these numbers because if we obviously didn't lose roughly the 100 million from Pepsi, which of course was one of their major distributors, then, people were probably looking at these numbers saying, the company probably would have brought in like 285 million, 300 million instead of 265, and missing the mark, as you see, by roughly $960,000, which is about 1/3%. They did come very close, even though they are dealing with some of these headwinds here, but missed by about 1/3%, less than $1 million. The EPS came in basically flat. I believe it was a tiny loss of a couple of 100,000 for the quarter. And you can see that Wall Street was expecting them to stay net income positive and post 2.2 cents. So technically a miss on the top and bottom lines, which is why I'm saying it can maybe continue downward into this wedge. However, I think that what's helping this stock right now from not staying down 10, 11% is the fact that the market's absolutely exploded, of course, off of that Trump victory that we heard about. So a lot of people are just even more pumped now for the markets, which again throws me personally for a loop, because if you're this pumped about Trump, that means you were probably more lackluster and upset during the last 3.5, 4 years. But again, markets just continue to climb and have been raging for like a year straight. And now we're continuing to take that next leg higher to even higher highs now after the Trump presidency. So I'm just very curious what to see. I'm curious as to what we're going to see happen over the next couple of months, because people may continue to ride off this hype and markets can definitely continue to go up. But in my opinion, if you look at a lot of the reactions immediately as Trump started to gain ground and gain more electoral votes, and it looked like he was going to become the winner, we saw what happened. First of all, we saw Bitcoin, as you see, popped immediately almost around like 10 p.m. last night. That started raging, hitting new highs, 75, 76,000. We immediately saw a drop in gold and silver, and people don't understand why, but it's because we immediately saw strength come into DXY, which is the US dollar index. So as the dollar gets stronger, technically gold and silver gets weaker. Also oil. I mentioned multiple times in the Discord so far, and we technically didn't even get them sworn in yet, which is going to happen in January of next year. But I mentioned that, in my opinion, the oil play is definitely one to consider. Because if we're going to bring the price per barrel of oil back down to where it was when he got out in around 2020, early 2021, then, oil was down to $30, $40 a barrel. And if you go back and you look at certain stocks like ExxonMobil, XOM, obviously exploded in value over the last couple of years because the value of oil has risen back up, went back up to above 100, if you recall, and has recently come back down to about 70 a barrel. So if we know that it may bounce around for a little bit, but as we actually get Trump sworn in, and if he does begin to authorize more domestic drilling and just kind of take the pressure off of oil, then we can see the price of oil come back down, which is why I mentioned if you're looking and potentially interested in a longer term option play, maybe consider, the oil ETF, symbol USO. You can buy, long term puts on that maybe if we start to see oil drop in value. Also, XOM themselves. You can potentially consider XOM longer term puts as the value of oil comes down. But anyway, again, a lot of these moves that we talk about, I know people were looking at his policies and wondering what's going to pop, what's going to drop on a Trump presidency. Again, that's one play that I'm personally looking for over the next year or so, is the oil play. But also, again, as I mentioned, if the dollar goes up, technically a lot of people say that as the dollar goes up, the stocks go down. And also, we immediately saw like a 4.5 spike up in 10 and 20-year yields last night as well. So I just want everyone to keep that in mind, because technically as yields go up, stocks are supposed to go down as well. So this is why I'm saying, do some of his policies technically mean a stronger dollar, a stronger U.S. market? Are we going to potentially revive our manufacturing industry? Yes, and technically all of these things, in my opinion, should be good for markets overall over the long term, right? But in the immediate short term, and that's why I'm thinking maybe like the first year, I do think we might have a sell-off and a pullback in the markets for 2025. Almost similar to what happened in 2016, if you recall. Like immediately everyone was pumped about Trump, right? So we started to rally. We were up for several months. And then as the policies started to be implemented, even though technically on paper it seemed like it was good for our markets did begin to sell off. And even economists and analysts were coming out and they were saying, well, this is interesting because technically, like unemployment is down, our GDP is up, right? These are technically all good economic indicators of a growing economy. But our markets were just kind of not really stagnating. They were just pausing for a second, waiting to take that next leg higher and really explode off the positivity that was coming into the country economically, if you will. So that's why I feel, in my opinion, I do think 2025 may be a rough year. And I know I just went off on a massive tangent, but remember, we do kind of have to take all of this into account when we look at stocks now moving forward, because we just changed administrations, we just changed a lot of policies. But my point is, because CELH technically just missed earnings, and if we do start to see a rise in the dollar moving forward, as we go into 25, we could potentially see something like CELH drop down into the very low 20s, as I said. And then right as we near the ball drop, or after the ball drops, and we approach Trump getting sworn in, we could potentially pop out of this wedge. And then also we can have momentum coming into next quarter's earnings as well, which looks like about the third week of February, roughly 3 months now from today. So that might be the play in CELH, but technically a slight miss, but again, not really a big miss. But I did say I liked it. So as I always said, I'm not hiding from anybody. Shares dropped 10%. Break even Q3 on the EPS, earned 30 cents a share a year earlier. Revenue $265.7 million, down from $384.8 million a year earlier. North American sales tanked, stealing the spotlight from an otherwise impressive 37% growth internationally. So that's why it really seems like just this whole Pepsi pullback here on their inventory was the main issue right here, specifically in the North American segment. Because apparently internationally we're growing well, and of course, again, they also cite here, as you see, online sales we'll get to in a second. Investors weren't pleased. The stock nosedived, of course, with many pointing to an aggressive inventory optimization move by Celsius main distributor as the culprit. This overhaul may have stabilized, but it left a mark, cutting down quarterly order volumes and squeezing margins. Despite the turbulence, Celsius is showing serious resilience on key fronts. Online sales with Amazon soared 21%, hitting $27 million as consumer demands remain steady for this lifestyle energy brand. CEO reassured investors, framing the distributor's adjustment as part of a larger plan to fuel long-term growth. Still, promotions and incentives aiding to gross profit margins, sliding it down from 50.4% to 46%. In my eyes, not really a big deal. The company's strategic outlook remains intact, with eyes on expanding its consumer base and pushing further into new market segments. So, in my opinion, are these numbers lower? Should the stock have gone down? Technically, yes. Over the longer term, I probably personally still see growth here, and even buying the stock at 30, the high 20s, or even if it dips down and you keep adding at, 25, 22, if it stays inside that wedge. In my opinion, I really can't disagree with you, because what you're really banking on now is future growth and future quarters kind of going back to business as usual as it was now that the Pepsi storm has cleared. So right now you're dealing with a little bit of turbulence, so to speak, and you may just have to weather the storm and ride it out 3 months from now, 6 months from now, and potentially get back on track over the next couple of earnings reports. And hopefully, if the company beats next quarter and potentially the quarter after that again, you can more than likely, in my opinion, maybe see the stock run back up into the 40s. And of course, long term, if they are truly taking market share and eating away at brands like Red Bull and Monster Beverage, then technically this is one that you may not want to jump ship from, in my opinion, right now, as they are technically rapidly expanding, minus this slight Pepsi setback. You understand? This company's strategic outlook remains intact, with eyes on expanding its consumer base and pushing further into... yeah, we just read that. And Celsius isn't just sitting back. In a bold move, they've acquired Big Beverages, a longtime co-packer, to boost manufacturing firepower and accelerate innovation cycles. So it sounds like they feel that the hype and the demand is going to remain. Again, Amazon sales increasing, so that's why they technically still have sectors of their business that are growing well and still seeing high demand for their product. So that's why bringing in this co-packer, in my opinion, may just solidify that they're going to see now this kind of growth get picked back up, if you will. And that's why I think everything's going to go back to normal. And this is actually, it is a bold move, but it's also a very interesting move, right? Losing some of that inventory from their, quote, major distributor. And then they kind of just took a step back and they were like, all right, you know what? Why don't we just buy up our own packer and just kind of take care of this shit ourselves. So that's why it is a bold move, but it's also a very smart business move, in my opinion, for Celsius. So I like this news, and that's why, again, something like this, if next quarter, if the following quarter, if all of a sudden this becomes a trend and we're seeing revenue start to slip, then we can consider potentially jumping ship, because we don't know how much revenue is going to pull back. But in my opinion, right now I'd give the company the benefit of the doubt. Sets Celsius up, the acquisition sets Celsius up for faster, more agile production, critical step given market dynamics. EBITDA might be down 96% for this quarter to just 4.4 million, but Celsius is betting big on this play to cement its position as a heavy hitter in the energy drink world, aiming to lock down North American dominance and ramp up international momentum as the supply chain dust settles. So this is what I mean. This is why 6 months from today, all of a sudden they may start raging again, and they may start beating these revenue estimates by 20, 30 million and change like they were 1, 2, 3 years ago, almost consistently. Earnings drop is notable. Pepsi reducing orders. And of course, we know that if this Pepsi news didn't hit, then chances are the stock wouldn't have dropped probably all the way to the 30s. It would have bottomed out maybe somewhere around the 50s or something, I think we were initially looking at. But it ended up breaking that support level, breaking those trend lines, and we dropped all the way down to that, I think it was like the 200-day moving average or something we looked at about 30 and change. So stock right now is getting beaten up. But again, technically, in the numbers, I still say it looks pretty decent. Long-term growth looking good. Stock down 70% since the peak. Yep. So, yeah, that's pretty much the update for Celsius. And let's look at stock charts real quick. I'll let you go. So we can see going into the earnings, RSI closed at about 42.5. So we did technically have room to drop down. But we ended up closing the day here at 42.5 after the big sell-off and then the slight bounce intraday. So the RSI doesn't really look like it ever spiked and dropped down too fast. But we can see the low at 27.78 technically was below 29.20, the bottom Bollinger Band here. However, we did technically climb back up and close above, which is why we may kind of just stay flat and slowly pull back. So this wedge, again, it could stay maybe in this wedge, but at the same time, we could flatten out and just completely ignore this wedge just because the markets are climbing so much. So that may help support and keep the stock up a little bit. So we'll see how that turns out. But MACD was essentially flat. If we look over here on the weekly, we can see the RSI was down basically at the benchmark and kind of stayed down there in the very low 30s on this news. You can see the bottom Bollinger Band on the weekly after this big drop in the trumpeting. You can see the bottom Bollinger Band now 2085, which is why I was saying maybe back to the top of that range that we were seeing, maybe like 17 to 21, right? So it dropped down. You may slowly come back down to the very low 20s there. But we had the MACD about ready to cross to the upside, which to me tells me that if they happen to beat earnings, the stock would have absolutely exploded. You probably would have seen that mid Bollinger Band, in my opinion, of about 39.5. But they happen to come in light. Let's check the pivot points real quick. But overall, I did like the company. Again, almost, well, as of the previous quarter, we were looking at, about 900 million in cash. The company has like $1 million in debt, which is nothing. Assets outweighing liabilities gives us positive equity. Right, adding those numbers up was like 1.5 billion, I think, roughly. And then if we come down here looking at last year's numbers, 1.3 billion, 200 million in profit, add those up, that's like 1.5 billion. So the cash and the equity plus the revenue and the profits is roughly like 3 billion, quote unquote, fair value. And the market cap, 7 billion. So yeah, we're trading only a little over 2x, quote unquote, fair value, in my opinion, which is why seeing it break down to a low, understandable, also seeing it bounce, understandable as well. Because I think a lot of long-term investors here, even if we see a pullback to 22, they're not going to mind too much. And they're probably going to be looking at the longer-term picture and saying, you know what? If I liked it at 42 and 31, I like it even more down at 22. So if I have some cash on hand, I'll just keep buying. I'll keep accumulating shares. I'll build a position, waiting for that U-turn recovery. Earnings get better. All of a sudden, we're back at 50, 60 and change. Boom, I just doubled my money. All because I looked at a growing business, technically, that I bought at a deep discount, right? The Buffett method. But pivot points, we were right here at 31.20. Obviously, we're technically below that. Next on the weekly, 787. I don't think so. You can see some bounces here off the previous year's support level as well. This one down here looks like it's about 18. So, of course, it is possible. We have to see if it stays inside that wedge. So, we'll keep an eye on it over the next week or two. Next support level here, 26.91 on the daily. So in my opinion, that does make sense, especially since we immediately saw it break to new lows. So that's why they may slowly be pulling it back there. And even this support level here of sub 24, again, very possible if we stay inside that wedge, but we'll keep an eye on it. But overall, again, in my opinion, can it go lower? Of course. Do I personally like it in the numbers? Yeah, I do. Yeah, I do. And we said this last time, and again, people were hoping for an earnings beat, but slight miss, so the stock takes another small hit here. But let us know down in the comments section if you still like the company, if you happen to sell after seeing it drop and they missed earnings, or if you think that even if it does go back, you're going to keep, building a position and you're going to play the long-term game. So let us know in the comments. But that's it. I'll end it there. Once again, stocks by the numbers. Thank you for stopping by. If you have questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.